Whatever the reason is you clicked this video, I'm probably not going to give you the answer you expected. Here's why. Let me show you this chart where along the x-axis across the bottom, you have the potential return you can get on an investment. And along the y-axis, you have the probability of getting that return. The chart would look something like this. So whether it's £1,000, £10,000 or £10 million, if you wanted to achieve a 10% return, you have a very high probability of achieving that. I mean, if you just look at the S&P 500, since inception, it's averaged a return of just 11.8% per year. Or even UK house prices. Since the 1960s, house prices have grown at just 8.2% per year. So here's the problem. If you only have £1,000 to invest and you get a 10% return for the year, that's only £100 profit, which I'm gonna guess probably isn't enough to cover the bills, let alone live a nice lifestyle. Now, the reason I'm telling you this is when people ask me, Tyler, how do I invest £1,000 or £10,000? They're often asking me, wanting me to tell them some secret strategy or some asset class they can invest into where they can 10x or 100x their money. But as we've seen, this has a very, very low probability of happening. Don't get me wrong, there are cryptocurrencies that have 10x or 100x. And I even made my first crypto investment in 2017, where I saw my £10,000 investment go all the way up to £100,000 in just a few months, and then all the way back down again. And so if you're chasing these unrealistic gains, you're chasing these unicorns, really you're just playing the lottery. My question for you is, when it comes to your wealth, do you really want to play the lottery, or do you want to stack the odds in your favor? And so the question is, well, what can you do then if you only have maybe £1,000 or £5,000 to invest? Well, if you want to make maybe £100,000, or you'd like to become a millionaire or even a decamillionaire, you absolutely can be, and you deserve to be. And so the first thing you need to focus on is increasing your income. And so if you don't have maybe a significant income, and I'm talking maybe 6 or multi-6 figures per year, and you're just saving up whatever you have left at the end of each month after you've paid your rent, your bills, your car payment maybe, how long is it going to take you to save up? Maybe 25, 50, £100,000, where if you were to invest that money, the returns are actually going to be meaningful. It might take a pretty long time. And so the biggest mistake I see people make when they set the intention of trying to get rich is they fail to understand the difference between income and wealth. Income is how much you make every month or every year, and wealth is how much you keep. And interestingly enough, many studies have shown that the correlation between income and wealth is actually very weak. You can earn £250,000 a year, but a lot of people that earn that money can actually still be broke. Or you can earn £30,000 per year, but invested wisely, over time that can compound and become quite a sizable amount of money. And so think of it like this. Income is like water flowing through a hose pipe, and your wealth is a bucket that you're trying to fill up with the water. Now, if you have a healthy flow of water coming through that hose pipe, i.e. a healthy income, but you're spilling it all over the ground and missing the bucket, then you're not going to get wealthy. You're not filling up that bucket. But at the same time, a hose which is just dripping out water droplet after water droplet over enough time can eventually fill the bucket. But if our intention is to get wealthy, wouldn't it make sense to start with improving the flow of water through the hose pipe, i.e. increasing our income? And how do we increase our income? Well, there's 2 things you can do. The first thing you can do is stack high value skills. In life, in a capitalist society, the marketplace rewards value. So the more skills you have, the more valuable you will be to that marketplace, and the more money you will earn. 2 of the highest value skills are sales and marketing. And if you can really master these skills, you will never be broke again. Or more specifically to property, if you become a master at sourcing deals, and you become great at negotiating, or you become great at raising finance, all of these things are going to allow you to increase your income. And so when you improve your skills, you can also move from being less of a passive investor to more of an active investor. A passive investor is someone that is not involved in the day-to-day management or decisions around how money is allocated or invested. For example, if you invest into a REIT, that is passive investing. Whereas if you go out and you look for deals, you negotiate the deals, you raise the finance from the banks or private investors, you manage the tradespeople and the builders that come in to do any refurbishment works, you're investing your time, your energy, and your knowledge. And so by doing that, and if you've done it well, you're going to generate a higher return on your money. But of course, you can only do that if you've developed the skills necessary. And the better you get at these skills, you will be rewarded exponentially in line with how good you get at these skills. For example, the top 1% of salespeople are paid improportionately more than those in the second or third percentile. And we see this the same in sports. The top 1% of football players, of basketball players, they're all rewarded exponentially more those in the leagues below them. And then the second way to increase your income is by starting a cash flow business, or working inside of a business where you're not necessarily trading your time for money, but you're rewarded based on the value you provide to that company. And so an example of a cash flow business could be deal packaging, where you're going out and you're sourcing investment properties on behalf of other investors and charging a sourcing fee. It could be an Airbnb model where you're essentially taking a long let off a landlord, you're then operating it as an Airbnb or serviced accommodation and taking the profit in between. Or it could be just any service-based business, like having a marketing agency and charging every month for running paid ads or content creation or video editing. But like I say, you don't have to necessarily start your own business. You can work inside of a business where you're not trading your time for money, but you're paid based on your results. For example, with one of my company's luxury property partners, we have agents that are making between £100,000 and £500,000 per year selling luxury property. Because of the high house prices, the fees that they charge, if they get great results for their clients, they're rewarded accordingly. So they earn money based on how skillful they are at their role and how much value they provide, not by how many hours they put in. And so the second thing that you need to be focusing on is investing in education. Now, I'm a huge advocate of personal and self-development. I spend 1 to 2 hours every day just dedicated to learning. I've probably spent at this point well over £100,000 over the last 10 years on courses, mentorships, and masterminds. And I genuinely believe it's one of the highest return on investment activities you can do. And the reason I think this is so important is because when people ask me, how do I invest this amount of money? It implies to me that you probably don't know what you don't know. And so one of the biggest things holding you back from making more money is simply ignorance. Someone said to me recently that the cost of not knowing how to make £1 million per year is costing you £1 million per year. And so if you can pay down this tax of ignorance, it's going to allow you to make more money. But in terms of education, I always recommend starting with books and podcasts, and then moving on to courses and masterminds, and then thirdly, getting specialized mentorship. Now, books are great because they're going to help you uncover all of the things you don't know. And once you've got more clarity around this, you can move on to courses and masterminds. And the great thing is with courses and masterminds, it gives you very specific knowledge and helps you implement what you learn. And importantly, with the right course, will also give you feedback on what you need to do next and how you can improve moving forward. But once you get to a certain level of success, there are less and less reference points to learn, which is why mentorship is so powerful. A good mentor is going to give you very specific and tailored coaching, and importantly, it's going to give you accountability. And the great thing is about a mentor, and even with courses as well, is that the person you're learning from is likely going to be years or even decades ahead. And so being able to learn from them and learn things that they had to learn the hard way is going to allow you to compress time and get the lessons without the scars. And finally, the third thing you need to focus on once you've done the first two is learn how to use other people's money. Of course, we all know the saying that success leaves clues. And if you look at any of the most successful property investors, developers, entrepreneurs in the world, they've built their businesses, and very substantial businesses, using other people's money. Because the reality is, if you just rely on using your own capital, it's going to take a very, very long time to build a serious property business. Now, this can include working with banks, where banks will give you financing in the form of debt, or what's most commonly referred to as a mortgage. And this is simply leverage, meaning for every £1 that you put into a property, a bank can give you £3 towards that property. What a lot of people fail to realize is that when the property increases in value then by 10%, your money that you've actually put in increases by 40% because you're getting 100% of the upside. Now, leverage allows you to get these higher returns, but of course it does come with a risk, because if property prices were to come down, leverage can also work against you. But investing, like we know, is just a game of risk versus reward. And so like I say, if you want to scale a property business, at some point you're going to want to have to bring in partners and private investors to help you fund deals. And other people's money can also refer to using private investors. You know, this is something we do in our own property business. And when you get good at making money in property, you can create win-win scenarios where an investor can invest in you, they get a return on their money, but you can also leverage their capital to make even more returns, and so you can keep a lot of the profits for yourself. Now, there are many different ways to structure deals with investors, whether it's as debt or equity or joint ventures, but a great example is our development project in Cambridgeshire. You know, this is a development for 17 houses. The total cost of the development is almost 5.5 million, and I don't have 5.5 million lying around to put into this project. So a majority of the money is coming from the banks. We've also raised over £1 million for this project alone from private investors, but it should still deliver a profit between £1 million and £2 million for us after the banks and after investors have been paid. And so there you go. You want to go focus on increasing your income. You want to be constantly investing and educating yourself. You want to be learning how to partner with private investors and use other people's money, and be prepared to play the long game and get rich slowly. I'll see you at the top.